of the webinar. Now, the whole content would include the need of investor education, some questions you can ask from yourself, how to use stop loss, capital diversification, some important market data and technical analysis. Now, why investor education? It is very important that in the markets you should be educated and you should know what exactly you are trading, what is the trade you are making, and how you should make profit in the markets. So 95% of the retail investors, they lose money in the markets and only 5% of them make money. So it's a zero-sum game. Less than 3% of Indians are currently exposed to the direct equity markets. Now, the equity exposure in countries like USA is as much as 44% of the total saving of the country. In India, around 57% of the money which you save is still kept in the saving account, which gives you a mere 4% return. So you are getting very less return if you keep your money in the saving bank account. So keeping your money in the saving bank account is again very risky for the clients. Now investors are losing money. Basically, the core reason why the investors are losing money in the market is the lack of education, is the lack of investor education among the investing community, where you should put your stop loss, where you should put your targets, how you should trade in the markets, and all these things should be very clear with the traders. Now, as you all know that need of investor education is very high in the current markets. There are many many markets which are correlated. It could be currency market, commodity market, or equity and commodity parity, and so on. So an investor needs to be educated and he should know all about the global and the local markets which are affecting the markets, and he should be able to create a trading strategy which will make him earn profits. Now here is what the trader normally does. Normally a trader does is he buys at the top point and he tends to sell at the lowest point. Now when we talk about a typical trader, the trader does not uses a trading strategy when he trades in the market. The trader is always focused on making profits, but it does not look at what price point he should enter and what price point he should exit from the markets. So it is very critical that you also see that is the market overvalued, it is undervalued, or fairly valued when you are entering in the markets. There are many retail traders who, despite this market rally which was after the Lok Sabha elections in the country, they still were not able to recover their cost in the equity markets. So the price at which they had bought these stocks, they were not able to recover that particular price also in this current market. The reason is basically the wrong price at which they entered the stock. No stock is good or bad in the markets. The price which we enter in the stock makes it good or bad. So normally the trader tends to buy at the highest point and tends to sell at the lowest point. This is the mistake the traders make. Now there are some questions which needs to be asked from the traders. The first point is that has every trader on the street lost money in the market? No, every trader has not lost money. Is making money purely on luck in the markets? So if you have a good luck, can you make the money? Or if a person has good strategy, can he make the money? Is there something known as trading strategy, technical analysis in the markets? Do they really work? Yes. Can a retail trader really earn and sustain for a longer time in the markets? Yes. Do stop loss really work, and what is a trailing stop loss strategy? So these were some questions you need to ask from yourself. Do you know a trailing stop loss strategy, what is a stop loss, how to put a stop loss, what are targets, how to partially book the profits, etc., etc. As you can see this particular chart, that what we have done is we have drawn a Nifty and a USD INR chart. As you can see, Nifty and USD INR is inversely correlated. So when the dollar is rising, the Nifty falls and vice versa. So this is how the whole market is pairing. A trader should also be very much aware about other markets which affect the base market. So let's say you are trading in the equity markets. You should also know what is happening in the commodity markets, or for that matter in the currency market or the international markets. This will give you a holistic view of the whole market, and it will help you to take better decisions when you trade, maybe for intraday or for the long-term investment point. Now, need technical to make money. Now this is a chart where we have displayed that how you can use technical analysis to make money. As you can see in this particular chart, what we have done is we have used a double top pattern breakout and a moving average breakout in this particular chart to show you how you can use technical analysis in the markets to make money. As you can see, this is the stock, and the stock has broken above the double top pattern on the daily charts. So this is the double top pattern. When it broke above the double top pattern, there was a moving average crossover also in that particular chart. So this shows that there is a double confirmation in this particular chart, and the trader can make money. And you can see the rise in the stock for that particular period. It was almost 1.5 months, was very, very drastic, and the consolidation period was very high. So if a trader is able to judge the correct entry and exit point of the stock or a commodity, he can make much more money as compared to the bad timing of the market. A risk to return appetite. Now it is very, very important that you should be clearly aware what is your risk and what is your return. So for example, talking about the current markets, the market has corrected a bit in the last week or so, and Sensex Nifty are almost down around 5% from their peaks. So a trader must be very, very clear that is this the right time to buy or sell in the markets, or he should stay away from the markets until the market has broken out from the trading range. So the current range is still intact. It was between 7450 to 7850. So this is a broad trading range which the market has made for itself. Currently 7600, 7580, 7525 are very strong support for the markets. The Nifty has to see that whether these points, whether these support points or target points are being breached or not, or whether he should wait in the markets and then trade when the markets have shown some great opportunity in the trading. So this is very, very important for a trader to take a call at what is his risk, what is his return, and then make a trading strategy on the markets. And this is how you can see how you can use a moving average or some technical indicators in the markets. As you can see, we have put in two moving average line on this stock. First is the longer term moving average, and another is the shorter term moving average on the charts. Now, as you can see, this stock has broken above the double moving average chart out here, and the trader has used the strategy of partial profit booking. So what he has done is he has bought, let's say, 1000 share here, and he keeps on selling at every point 25% 25% of his shares and stays in the market till the moving average is broken. Now here we can see the stock has made a double top pattern and the stock has broken below its short-term moving average. So this was a sell point, exit point for the trade. So the point which I am trying to make out here is, if you use proper trading strategies in the markets, you can make good money in the market and you can keep the profits coming via using the trailing stop loss strategy in the markets. Now leveraging. As you all know, leveraging is not very easy for every investor to do. Leveraging requires a very high skill for every trader, and the trader must understand the risks associated along with the leveraging. So when you leverage on a trade, you should clearly understand that you are getting into a danger trading zone. So leverage simply means that you are trading, you are getting an extra limit from the broker and trading for much more capital which you have. So it's always a two-faced sword. When you are leveraging, you should not leverage more than 5 to 6 times of your base capital, and you should always keep a stop loss intact when you are leveraging on the trades. Now on the next slide, what we can see is, we can see the effect of leveraging. As you can see, there was a huge gap down on this particular stock. So a trader must have leverage. If the trader has leverage on this particular stock, the overnight gain or loss on that particular stock or on that particular commodity can make his capital go hugely down from the current markets. So when you are leveraging very high, you should always remember that you should not leverage for more than 5-6 times or maximum 7 times of your base capital. Understanding stop loss. Now stop loss in very simple terms is limiting your losses and putting up a point beyond which you will not make loss and you will exit from the trades. That simply is known as a stop loss. You can also trail your stop loss. So once your targets are achieved, you can keep on trailing your stop losses forward and you can make most of the ground with the trailing stop loss strategy. Now this is how you can use a moving average line as a trailing stop loss. What we have done here is, we have used the moving average line as the trailing stop loss on this particular stock, and we have taken the support of the moving average and we have moved ahead with the moving average as a trailing stop loss. So the trader has entered at 102 and he was in this stock till 180 only because of the moving trailing stop loss strategy. So this is how you can use the trailing stop loss strategy. Now diversification. As we say that the trader should not put all their eggs in one basket. The same goes with the investment. So if you are investing, you should take care, or you should clearly understand that you should not invest 100% of your capital in only one asset. You should diversify your capital into equity, debt, gold, and different other assets which are available. Talking about a trader, if he is trading in the market, he should never put all his money in one single trade. He should at least diversify in 2 to 3 trades when he is trading in intraday or maybe for a very momentum trading position. Now this is how you can use the diversification. There are 2 charts which we have put in, DLF and Tata Steel. On the DLF chart, what we have done is, the trader, let's say the trader was long in DLF and short in Tata Steel. So if he is making a loss in one particular trade, he will be making a profit in another trade. So this way he can diversify his trades and eradicate the chances of huge losses on one particular trade. Now carrying a loss trade. As you can see, the markets run on news and they are very sensitive to the news on the stocks. So if you are making a loss on a particular trade, it is always advisable that you should put a clear stop loss or exit the leverage position in intraday. All the STBT, BTST trade should be non-leverage trades for the trader. As you can see in this particular chart, trend is the friend. You should not always buy or always sell in the markets if you are a trader. If you are an investor, you can buy at dips and you can sell when you feel that the stock has peaked out, or when you feel that okay, now the story in that particular stock is no more intact and you should exit from that particular stock. Now at Epic Research, we follow some trading strategies. First trading strategy is you should only buy above or below the level which is suggested to you. So let's say if we have suggested to buy above 100 or sell below 50, so you should not enter or exit below before that particular level has reached in the markets. Should always follow proper stop loss in all your trades. So when you are trading, you should follow all your proper stop loss. Keep booking profits as we advise on our SMS or on our calls. Whenever we advise to book profit, you should not wait and you should not be very needy and greedy in the markets to wait for the next level, because you never know when the markets could reverse back. Do not trade in trials. So when we give trials to the clients, we advise normally not to trade in the trials. Never over trade. Never trade on rumors. You should never trade on rumors. You should ask your relationship manager to clarify on that particular rumor. You should always consult your advisors in case if you have any confusion or query. We suggest you to maintain a uniform strategy in all your trading patterns. You should not change the trading capital or lots in the middle of the month. Those trading in single lots should book profit in the first target itself. Now these are some sites which you can go in for the research tools. Okay. So now we'll be showing you some live charts on a live software. Let me first go to the Nifty chart. Now in this particular session of the webinar, what we'll be doing, we'll be showing you live charts of stocks. We'll be taking up your queries if you want to see the chart of any particular stock, and then we'll be showing you how and what should be the next trade in the markets. Now as you see, currently we are showing you the charts of Nifty. Now you can see Nifty has made a double top pattern and reversed from that particular point. This was the double top pattern. If we see in detail, the Nifty is making a lower high, lower low pattern. So let's say if we draw a trend line from here, so the highs are lower and the lows are again lower. You can also see there was a huge gap down opening in yesterday's trade, which shows that the market is taking their cues from the international markets, and the international or the SGX markets are affecting the markets to a very great extent. Now, let me show you one more interesting thing which is there on the pattern. As you can see that there is a head and shoulder, incomplete head and shoulder pattern formation on the Nifty charts. This is the left shoulder, this is the head, and this is the right shoulder for that chart. Now we cannot very convincingly say that this will result in the breakout, because there is still 200, almost 100 to 200 points left for the neckline to be broken. Almost 100 points which is left for the neckline to be broken. This is the Nifty future chart. The neckline which is currently at 7447 or 7450 levels broadly, that is a very crucial level for the stock. Now if we talk about putting up a moving average, let us put up a 35-day moving average. So as you can see, the stock has shown some kind of profit booking where it broke above the 35-day moving average. It again went up and it has again broken down the 35-day. Let us see the 50-day moving average. As you can see, the stock Nifty was consistently not breaking the 50-day moving average, but with the yesterday's trade it has closed below the 50-day moving average. Now it can have two effects. First, the market could be in the oversold or near to oversold territory, and the traders could come out tomorrow and maybe do some value hunting, because the US markets closed on a very positive note yesterday. The another point is that the long-term long traders could come out and keep on shorting in the markets. So you'd advise the traders not to trade for the first 30 to 45 minutes on the Monday's trade and see what the pattern is making for the traders. Now let us move on the Bank Nifty chart. Now again, almost the same pattern which is there in the Bank Nifty chart. You can see it is hovering in a very tight range for a very long time. So almost from the mid-May to the current mid-August, almost 2 months, the range is very tight for the Bank Nifty. It is almost a range of 800 to 1000 points which the Bank Nifty is trading in. So again, we can see the traders are very much confused in the Bank Nifty that whether they should go long or whether they should go short in the markets. Currently the short-term trend is moving towards the support zone. We can also see some value buying in the Monday morning trades. You can expect the markets to open a slightly gap up in the Monday morning trades. Let us move to the commodities. Now this is the gold chart which we are seeing. Now let me remove this particular moving average, or let us make it a 35-day moving average. Now as you all know, Nifty and gold are almost negatively correlated. So if the equity markets are down, the economies are down, the traders tend to invest in the safe haven, which is gold for these guys. So as you can see, gold is taking the support of that 35-day moving average and has touched the very short-term resistance level which was placed at around 29,000 on the intraday charts. Now let us see the weekly charts of that particular stock. As you can see in the weekly charts, the gold has made a V-shaped bounce back, which gives the sign that the traders are buying at every dip on the counter. So again, the gold seems to be on a bullish note unless the 35-day moving average is breached. We can see some correction here and there on the stock, on the gold counter, but a major correction would only come in the gold when the 35-day moving average is breached down. Let us go to the silver. Now as you can see, silver is a commodity which is more of a consumption and a bullion commodity both. As we are seeing that the traders, after a huge rally in silver, which was somewhere at around 39,000 to the levels of somewhere around 45-46,000, almost a rally of 10-11% which was there in the last 2 months. The trader have started booking some profits on the counter. As you can see, it is moving in a staggered downward movement. So a staggered downward movement is that the traders are not heavily selling the stock. They are keeping on the stock. They are doing a momentum trading. They are taking the advantages which are there. They are taking the most of the opportunity which is there on the charts. So on the silver again, you can see some bounce back in the short term, but on the long term, until unless the moving averages which fare somewhere are at around 44,570 levels at the current point, you will not be hugely bullish on that particular counter. Let us move on to the crude oil. As you can see, the crude oil, after making a brief movement after the Syria and the Iraq, Israel and all the Gulf countries were into the war zone, it made a immediate high at around 6,500 levels, and then it breached back towards the normal levels which we are seeing now. Now, as you can see, gold is making a multiple bottom pattern on around 5950 levels. Currently the MCX future closed at 5975 levels. So we can see that the gold counter is making a brief bottom on the intraday charts, and we can find some immediate buying support on the stock. So the trader should be very vigilant until it breaks above the 6010 6025 levels on the daily closing basis. Let us move on to the base metals, which is first, let us take the copper chart. Let me remove some okay, so now what we are seeing is the copper is covering this particular sell which it made some time back. So this is not a rally, this is just the cover up or the short covering which it made on the chart. So still the copper is not very much bullish for the long term, but yes, medium term we can see a buy on dips kind of market. Let us move on the aluminum. Now aluminum, zinc, or maybe let us see zinc also. Both charts are almost similar in the past 1.5 months. As you can see, the aluminum chart is rising and it is making a higher high, higher top pattern on the daily charts. It is also now over bought on the stochastic and RSI charts. So the trader should keep on booking profits in the zinc if they have entered at a very lower level. Definitely this is not the point to short for a medium term, but intraday you can see good opportunities, long at this particular point. So traders can short that particular level once it breaches above the 14-day moving average on the daily charts. Let us go to the USD INR currency chart. So this is the Metastock software which I am currently using. So USD INR chart, as you can see, I guess I do not have the updated charts now, but nevertheless the pattern is almost similar. Now as you can see, the USD INR charts are continuously rising and making higher highs for past 15 days to 20 days. The reason mainly is that the traders are booking profits, the FIs are taking profits from the table and exiting from the levels, and the gold and the currency has seen their immediate bottoms at somewhere around 58 to 58.50 levels in the daily charts. So these were some charts which we showed you. If you have any query on a particular stock, please do write in the query on the chat option, and we'll be more than happy to show you that particular chart and help your queries. Okay, so we have received some question. Okay, it's a very good question that we have told you in our webinar that you should not put all your money in one particular trade. You should divide your capital and put your capital into different trades. So how many parts of your money you should capital you should divide? Ideally, you should divide your capital into 2 to 3 parts. Do not trade in more than 2 to 3 shares at one particular point in time. So your open position should not be more than 2 to 3 trades at one particular point in time. So I hope I have answered your query. If you have any query related to any share, any commodity, any currency, and if you want us to show the chart and tell you the levels, we'll be more than happy to tell. You can simply ask that query in the chat option. In the same chat option which you are getting the chat from our side, you can put in the write in the name of the share, future, or maybe cash market, and we'll be answering those queries. Okay, another very good query, a generic query: how you should trade to balance in equity and commodity both. So first, let me take it this way. If you are a very new trader in the market, do not move to the commodity markets for first 3 months. Trade only and only in the equity markets. If you are a veteran trader trading for last 1.5 years, only in cash market. And if you are trying to enter in the commodity market, what you should ideally do is you should first watch the commodity market for next 10 days, do a paper trading. You should not do a real trading on the exchanges. You should do a paper trading, and then if the paper trading is successful, then you should move on to the real trading for the commodity market. And same goes for the equity markets. Ideally, commodity should not be more than 30% of your asset allocation at any point in time. Another question: what is the effect of America's hit in the market, which sectors would move on? Well, in the past 1.5 months or 2 months, when the global markets were seeing huge turmoil in their respective countries, what I have witnessed personally is that nowadays our markets are not that much highly correlated to the global markets or global news. India itself has many markets, many news to react to, made with the government policies, made with the new government which is being made, etc., etc. But yes, there are many sectors that would be affected if we correlate it with the US market especially. The most important or the most critical sector is the IT sector. The IT sector is very much related, still dependent on the US UK market. So if there is some fundamental change or some drastic shift in the core of these markets, you can see a very drastic impact on the IT sector to start with, and all other export related sector, made with the textile sector which exports to the US, made with the manufacturing sector which exports, made with the automobile companies which exports to the US, and so on. Okay, another question, which is a very clear-cut question, that if you have 5 lakh rupees, how much should you invest in each call during the day? If you have 5 lakh rupees cash in your kitty, I am assuming a 10 times limit from the broker, which makes it 50 lakh rupees total limit. Divide that 50 lakh into 3 parts. Somewhere around 17-15 lakhs is the amount which comes. So at a particular point in time, if you are a pure intraday trader, should not invest more than, take a position of more than 15 lakhs in one particular trade. I hope this answers the query. Okay. Another question from the options kitty, that why don't we get profit when we sell an option and we only have to buy an option? It is not that you do not get profit when you sell a particular option. So let's say take an example of yesterday's market. We take 7700 call, which if I'm getting it right was somewhere at around 80 90 rupees 2 days back, and it closed at somewhere around 50 rupees yesterday. So if you would have sold that particular option at 100 rupees, you would have almost earned 50% of the capital. But yes, selling an option requires a huge money and has a huge risk for the trader. So this is something you should take care when you sell a particular option. Okay, a great question, and I guess this question would be related to most of the traders in this particular webinar. How can you put stop loss and target both at the same time? Because the system takes or consumes extra limit. Okay. There are some stockbrokers in the country which have introduced a system of bracket orders. Now what bracket order is, let's say you have bought 100 share of Reliance at 1000 rupees and you want to keep a stop loss at 995 or 990 rupees and a target of 1020. So when you do a selling order, you select the bracket order, and in that bracket order you mention your stop loss and target both. So the extra limit would not be consumed. First point. Second point, that whatever, if the target is first executed, your stop loss would automatically cancel, and vice versa. You should ask your broker about the bracket order facility, and then you should make full use of that particular facility. Okay, we have received a question on a particular stock, which is Radico Khaitan. Let me move on to my screen and let me open that particular stock in the cash segment first. Okay, so we have received a query on a stock known as Radico Khaitan. If I'm fundamentally getting it right, it is more in the liquor side of the business. Okay, so this stock is correcting hugely from the tops, and I do not see any sense in buying this particular stock unless it breaks above its 35-day moving average purely from the trading side. If you are an investor and if you know that the stock has some positive thing going on, you can keep on buying the stock at every dip, only if you are an investor. So 90 is a level which technically is a very strong support, because it was a 1 year low on that particular stock, a 52-week low. So if you see it somewhere near at 90 and you are an investor, you can buy some stock. And if the stock breaks below 90, if you are a trader, you should exit all your stocks unless it breaks above the 35-day moving average line. I hope I have answered your query. Let me take some other questions also. Okay, so there is a question: if you have 1 lakh rupees to invest, what you should invest? Ideally, if you have 1 lakh rupees to invest and you want to invest in a long term, you should invest only in the nifty blue chip companies. There are many good companies. The telecom sector is growing good. you can get the steel sector at a very good value at the current point in time. So you should try looking at investing in the Nifty 50 stocks. Okay, so there were some queries for the services. Unfortunately, this webinar would not be dedicated to the services because I do not tackle the service part. Nevertheless, if you have any queries regarding to service, you can mail it to the info at Epic Research, and they'll be more than happy to answer the service queries. Okay, how can you decide the target price for the stock price? So, well, it is not very easy for you to decide the target price because it requires huge analysis. So if you are taking the research services of any company, let that company decide the target price, and you should only trade according to the trading strategies. Okay, so if the market is highly volatile, 50 to 80 point Nifty movement, should you buy, call and put both? No, you should not do that particular trade, because when you buy, call and put both, if the market is rising, you will be making the loss in put and vice versa. So ideally, in the volatile market, you should avoid trading in the options market. Okay, who all are offering bracket orders? There are many different brokers. Unfortunately, I am not authorized to name a broker out here. You can Google bracket order on the Google, and then you can get the name of the broker. Okay, SBI and Unitech are the other stocks which are being asked. Let me open that particular stock if I can. Okay, so as you can see, SBI although came out with better than expected results, but the main problem with the PSU banks out here is the asset quality. We have seen the recent case of, I'm not remembering the name of that particular bank, the MD was being arrested. So the point is that PSU banks has a very high factor of governance. Corporate governance is a very low level for the PSU banks. Nevertheless, talking about the technical aspects of that particular stock. Okay. Okay, this stock is again in the bearish zone, and the RSI stochastic again is showing a sell sign. MACD again is showing a sell sign. So if you are a trader, you should ideally not enter at this particular point in time, and you should wait for the stock to show some strength on the maybe RSI or the stochastic before you enter that particular point. So this is a no trade zone for SBI. Let us move to the Unitech chart. Now Unitech mostly after the budget has shown a good rally. It is again a good chart. I mean, you can see a double bottom formation on the chart. So which is at around 24, and the current level is somewhere around 27.65 on the future point. You can hold on to this particular chart. If you have bought that particular share, you can keep a SL of 26 or 25.80 and keep on holding this particular share. Indian Hotels and Finolex Cable. Another question is for Indian Hotel. Okay, now again this chart is showing a high bearish pattern on the daily charts. You should avoid buying this particular share. I mean, although on the daily charts it is almost oversold on the daily charts, where the RSI and stochastic both are at that oversold region. So until unless you see a break almost above the levels of 93 on the daily closing, you should not enter this particular stock. Another was Finolex cable. Let me see that stock also. Finolex cable. This seems to be a good chart. This is making a wedge pattern on the daily chart, and this has broken below that wedge pattern. This is a sell stock. You should not buy into this particular stock. This is a sell stock. Okay, this is a sell stock. You can sell this stock keeping a SL of around 203. The current price which is coming is 200. So you can keep a SL of somewhere around 205, 206 on a medium term, and you can sell that particular stock. Tata Power. Tata Power is again a sell kind of stock, mainly because of the huge run up which it had seen on the charts. It is standing at the support point, a very mini support point of the stock. So if we take this as the support point, okay, so the next support for this stock is around at 93. Currently it is at 95. We should sell if it breaks 93, because it will be drastically falling to 80, 85 levels. Okay, another stock is Akshapti Fiber. Long time I've seen that particular stock. Akshapti Fiber is not a pure momentum stock. It is more of a operator based stock. So would not like to comment much on this particular stock. Aurobindo Pharma. Okay, Aurobindo Pharma, after a huge rally from somewhere around 200 to non-stop rally of somewhere at 780 rupees, it has taken a pause and it has shown a falling bottom pattern. Ideally, for Aurobindo Pharma, we should buy only when it breaches above 749, and a sell should be initiated only when it breaches below 711 rupees. So till that point you should wait in that particular stock. Okay, there is a question that sometimes our call, when the call comes, the stock is already run in, or you do not get the time to enter that particular stock. What you should do? You should ideally avoid trading in that particular stock. You should call your executive and ask him for the next call which is there on the counter. So these were some queries, and these were the answers which we had given to your queries. Now at this particular point in time, we do not have much of the queries, we don't have any queries. We'd like to thank you all for attending this particular webinar, and we hope that this webinar would have made some good to you and you have gained